The air in the crypto world is thick with a strange kind of quiet right now. Bitcoin is consolidating, Ethereum is grinding, and a lot of the big names are just sitting there. But beneath the surface, something is brewing, something big. A project that was once a quiet giant is starting to stir, and the signals are everywhere. We're talking about Kaspa, and the data we're seeing right now isn't just a flicker, it's a blinding flash that could completely reshape its trajectory. The next few weeks could be the most volatile and the most rewarding for its holders. Welcome back, crypto pioneers. You know we don't do fluff here. We dig into the data, follow the money, and find the real alpha. Today we're zeroing in on a story that's developing at breakneck speed, and it involves a project that has quietly been building a foundation so strong it's almost unbelievable. Kaspa. For weeks now, the price of KS has been in a holding pattern. It's been stuck in a frustrating sideways consolidation, trading around that 8 cents price point. For most traders, this looks boring. It looks like a dead chart. But for those of us who study the deeper mechanics of the market, this kind of calm is a prelude to something monumental. It's the moment when the market decides whether to launch to new highs or collapse back down. And with KS, the stakes are higher than ever because the fundamentals are lining up perfectly for a major breakout. So, why are we talking about Kaspa right now? Because the whispers from the development team are getting louder. Just recently, Kasplex, the team behind the upcoming Layer 2 solution, dropped a bomb on their X account. The tweet was short, but the implications are massive. Our mainnet chain ID is 202555, the date of crescendo. It's our way of saying thank you to the $KS developers for building the foundation that makes L2 possible. Closer and closer. Let that sink in for a second. Crescendo. That's the name of the hard fork that supercharged Kaspa's block DAG architecture to 10 blocks per second. It was a technological leap forward. Now they're using that same name in the context of their Layer 2 mainnet launch. This isn't just a random number, it's a symbolic nod to their biggest technological triumph, a hint that the next phase of Kaspa's evolution is not only ready, but imminent. And what would a functioning Layer 2 mean? It would transform Kaspa from just a high-speed payment network into a full-fledged, decentralized finance ecosystem. Think smart contracts, DeFi lending protocols, and the ability to build on top of what is arguably the most scalable proof-of-work Layer 1 on the planet. But here's where the tension really builds. Is this all just hype? Is the market just reacting to a tweet? Let's look at the hard data. Just yesterday, Kaspa processed a staggering 8 million transactions in a single day. And it did it with zero downtime, zero delays, and zero bottlenecks. To put that in perspective, that's approximately 3.5 times more transactions than Bitcoin and Ethereum combined during the same period. This isn't a theoretical number, it's real-world on-chain activity proving that a block DAG can scale while maintaining total decentralization. What happens when you combine massive technical potential with a major narrative shift? You get a powerful surge in sentiment. And guess what? Kaspa just hit the #1 spot for bullish sentiment on CoinMarketCap. The market is starting to recognize that the fundamentals and the on-chain activity are no longer a secret. They're becoming impossible to ignore. Adding to the narrative, a new DeFi lending protocol, Cascade, has officially announced it will be launching on IGRA Layer 2. This is a tangible commitment from a serious project, a validation of the entire Layer 2 roadmap. They're not just talking, they're building. They're even setting up their own IGRA validator to help secure the network. This is how a new ecosystem is born, and it's happening right before our eyes. But with all this positive news, why is the price still stuck? The answer is in the charts, and it's where the real battle is being fought. Alright, let's get into the technicals. We've been tracking this for weeks, and so far, the game plan has been playing out perfectly. Yesterday, we highlighted the critical support zone between 8 cents and $0.083. We warned that a break below this level could send Kaspa tumbling down to 6 cents or even $0.052. So, how did it hold up? Perfectly. The price is still moving sideways, respecting this crucial support. This isn't random. It's a clear signal that there are strong buyers waiting in the wings, ready to defend this level. On the flip side, we also identified the major resistance zone between 10 cents and 11 cents. A clean break above this with significant buying volume would be the signal for a new leg up, potentially targeting 12 cents or even 15 cents. But that hasn't happened yet. The volume remains low, which tells us that big players are in a state of accumulation, not distribution. The market is coiling, building up energy for a massive move. Now look at the big picture. The daily chart shows a long period of consolidation after that massive run to 19 cents earlier this year. We saw a dip below 10 cents and even a touch of $0.052 before the bounce. Since August, the chart has been making a series of lower highs, giving it a slightly bearish feel, but the broader picture is still a large trading range, a boxing match between 6 cents and 12 cents. The crucial takeaway here is that if the buyers can continue to defend the 8 cents level, it's a setup for another run at that upper resistance. But if that support gives way, the selling pressure could intensify, sending the price back down to test the low end of the range. Let's check the indicators. The 4-hour RSI is sitting around 36. The longer-term readings are near 40. Both are below the neutral 50 line. This indicates weak momentum. It's not a strong sign for a quick breakout, but it also confirms what we're seeing on the chart. The market is not in a momentum-driven state right now. It's in a consolidation phase. The market is waiting for a major catalyst. Finally, let's talk about derivatives. Open interest is steady at $476 million, which means traders aren't closing their positions, but they're not adding new ones either. The net shorts have a slight edge over the net longs, $224 million versus $193 million. This bearish sentiment among futures traders is a key detail. It tells us that many are betting against a major breakout, but in a sideways market with a major catalyst on the horizon, this can be a very dangerous bet. A sudden move to the upside could trigger a massive short squeeze, providing the fuel for an explosive price rally. So, what's the final word for today? The 8 cents price point is the most important level to watch. It's the line in the sand. As long as Kaspa can hold this level, the bullish case for a Layer 2 driven rally remains intact. The foundation is there, the on-chain activity is surging, and the ecosystem is expanding. But if that floor breaks, be prepared for a potential drop to 6 cents or even $0.052. For now, the price is just waiting for stronger volume to pick a direction. My analysis suggests that all the pieces are falling into place for Kaspa. The Layer 2 narrative is about to go from a rumor to a reality, and when it does, the technical and fundamental forces will align in a way that could finally break this sideways trend for good. The question is, are you ready for it? Disclaimer. All content in this video is for informational and educational purposes only and does not constitute financial advice. The cryptocurrency market is highly volatile and speculative. You should not invest more than you can afford to lose and should seek professional financial advice before making any investment decisions. I am not a financial advisor. All opinions are my own.